What's up, guys? Nick Sean with Mission FX here. This is the very first video you should be watching if you are brand new to Forex, never heard of it before, you just downloaded the Metatrader 4 app on your phone, and you're trying to figure out what to do. So here's what you do. I'm going to walk you through step by step each and everything you need to know if you have never learned Forex before, and you're going to learn it all right now, okay? So after you download the Metatrader 4 app, you'll see in the top right corner of the screen, I have the Metatrader 4 app. We're going to open up the application, and it's going to bring you to a screen that looks like this. Now, if you're brand new, first thing you're going to do is you're going to be opening a personal demo account. So we're going to click that one right there, and then you're able to find whichever broker you want. There's a couple different brokers. Here's what I recommend when you first start. With the smallest spreads is a broker called Traders Way. So in this Find Broker box, you're going to type in Traders, and then it's going to pop up with a Traders Way demo account. That's what you're going to click. You're going to click that, and after you click it, you can see like all your information right here. So right here, it's kind of got all my information here. You don't have to put your real name, phone number, email, and stuff like that. This is my stuff right here. Don't stalk me. That's my phone number. But you can put all your information right here, and then your account information. So whatever, for this right here, I'm just going to do MFX. I'm just going to call it Mission FX. There's my phone number, Sean Movies Official, for my email. And then right here for the account type, it's going to be Traders Way, ECN, USD. So you're going to make sure it's just USD if you're in the US. If you're in another country, use whatever your country's currency is. Leverage 1 to 1,000. You can make this whatever. This is just for you to play around with. 1 to 500 is usually a typically good leverage if you're going to be leveraging an account. For your deposit, do something reasonable. I recommend the smallest one, like $3,000. After you've got that basic information filled out, you're going to click Create Account. So, all right, we got to make this name longer. So I'm just going to make this MFX Trader Setup. Yeah. Now create account. It's connecting to this account. So right here, it's going to fix your account up for you. It's going to bring up a little screen like this. And what you're looking at right now is you're looking at what's called currency pairs. And these currency pairs are what you trade in the Forex market. In the stock market, you trade stocks. In the cryptocurrency market, you trade stuff like Bitcoin, Litecoin, Ethereum. In the Forex market, the foreign exchange currency market, you trade these right here, which you're looking at on the screen, which are currencies. So right here, if we look at these currencies, we can see them all right here on this screen. You can add currencies by clicking this plus button. Okay, and then you can go and click on like ECN. You can see there's all these different currencies you can trade. You can go to energies. You can trade oil, natural gas. You can go to metals, and you can trade silver and gold. And so that's how you add the currencies. If you don't like one of them, for example, you can click right here. It's this button on the right, edit, and you click that. You can click the trash can. You can delete a currency. If you're not friends with it, you don't have to trade it. And you can do whatever you want. If you just want to trade one pair, I used to be this way. I used to trade one pair. You can delete everything. You can leave one pair, trade one currency pair. So if you look at the lower left-hand corner of the screen where it's got the two arrows, that's the quotes window, what we're on right now. Click the one right next to that. This is the charts window. From this window right here, you can look at charts. You can look at the market data. Now you're looking at a chart right here with all these candlesticks. You're wondering, man, what's going on? This looks kind of crazy right here. Whenever you're looking at charts, you can see where price has been, and it uses a time frame, okay? So if I'm looking at this chart right here, what I'm looking at, if you go to the upper left-hand corner, I'm looking at the currency pair, the euro versus the US dollar on a minute 5 chart. Now what that means is that each one of these candlesticks represents 5 minutes worth of price data. So if I look from right here to right here, within 5, 10, 15, 20, 25 minutes, the market went from right here to right here, okay? This is 25 minutes worth of price data from here to here. The market went from this price over here, 1.2316, up here to this price up here, which is whatever. So this is how you look at the charts. This is what you look at for patterns, and this is how you analyze the market to make money. So we'll get into more of that later. Right now, you just know that this second thing at the lower left-hand corner right here with the little candlesticks, that's charts. That's how you look at charts. Now I'm going to tap the button in the middle on the bottom of the screen, which is that upward slanted arrow. I'm going to tap that right here. This right here shows all of your open trades that are floating in profit or loss. So whenever you enter a trade, it'll pop up right here in this window. And from this window, you can manage that trade, such as closing the trade at a profit or a loss. You can set in what's called a stop loss, which is an area where the market gets to at a certain amount of loss that you just want to get out to prevent further losses. It'll also allow you to modify in order to set a take profit target, which means that if you enter a trade, you get it right, it ends up going in your direction, it'll automatically close you out at a certain amount of profit, whatever you preset in here. We're going to learn more about that a little bit later. So this is how you manage all your open trades. This middle button right here, the trade window. Now, if we go to the back to the bottom of the screen, we click what looks like the little inbox area. You click that. This right here is your trade history screen. So from the trade history screen, you can see right here, it has a deposit, the balance, which we just made this demo account, $3,000. You can click these orders right here and you can see all of the transactions that have occurred within your account. So you can see whether or not you bought or sold a currency. You can tell if you transferred money to your account, if you deposited money, if you withdrew money. All the transactions on your account are going to show right here in the trade history. Now, if we click this upper right-hand box right here, the period, it can show today, it can show last week, last month, last 3 months, or you can set a custom period to see your trading history by. That's all up to you. So typically, most people just keep it on the current day. Market's closed right now. It is Friday evening over here in Texas, about 10 p.m. Market closes at 4 p.m. CST over here. So market closed roughly 6 hours ago. So market's not open, not going to show anything today. But today is what you would look at most of the time just while you're trading. So that's right here. These two things, if you look at the bottom right-hand corner of the screen, this is news. We don't typically use this for news. You go to another website to look for news events and stuff like that. This is irrelevant. Don't worry about this. The thing on the far right side, this is a little like chat community. No one uses this. As you can see, last year in August, I messaged one of my dudes, Jamal, but it was so confusing. It's just like, it's weird. You don't want to use this chat function. So these two things on the lower right-hand corner of the screen, we do not use these right here. You just use these 1, 2, 3, 4 things on the screen right here. That's pretty much what you do whenever you're looking at trade. So if you're over here, let's say we're looking at a chart. There's two things, usually two components to your chart, is you can have what's called your main chart up here. And the main chart is just this area right here. It's where price candles are painted. And then what you can have is you have an indicator, like for this instance, we have an indicator called the RSI, which is a relative strength index. And what an indicator is a tool that helps you predict which way the market will go. In short, and a little bit more to it than that. But indicator is just a tool that gives you a little example of where the market will go. Sorry guys, I've got like a bunch of students still in the group chat. Everybody's always active in our group chat here at Mission FX, even on the weekends. It's crazy. These guys are talking about having a yacht party. Crazy stuff. Okay, so this is the main chart. This is the indicator window. Here's what we're going to do to set up our indicators for Mission FX. This is what you're going to do. So this is the quotes window, right? We click the button right next to that, which is the chart. So you're looking at a chart right here. Chances are whenever you first start, you're just going to see this right here. You're not going to have this, or you might depending on which broker you open with. So right here is what you're going to see. All you're going to do is you're going to click this F button right here at the top. What that is that allows you to add an indicator. So we're going to add an indicator. We're going to add a tool to our charts to help us predict which way price will go. So you're going to click that F button, click it, and right here on the main chart, what you're going to do is you're going to click this right here. I've already done it, so it's right here. It's a moving average, but pretty much you're going to click the F+ button. You're going to click moving average, and when you put that moving average in, you're going to make sure that it says this right here. A period of 50, shift of 0, method of simple, applied to close, and style you can put whatever color you want, whatever color works best for you. So that's the first indicator that you're going to be doing. There's the second indicator we're going to do. So after you get that indicator, it's going to just, it's going to paint this little line on the screen. Mine's red. It's red, just real easy for me to see. So it's going to paint the indicator. The indicator is just a moving average. It just shows which way the market is going. If we're going up or if the market is going down, then this indicator will point down. And all it does is it takes the average of the last 50 candles of price data, and then it plots a line to show you the trend of the market, so which way we're going. So that's the first indicator. The next indicator we're going to add, we're going to go back to the F button right here, indicators. We're going to click F. It's going to be right here. You're not going to have the indicator 1 and RSI already there, so you're going to tap the F+ button up here. But once you do that, you're going to tap the F+ button and you're going to scroll down until you see the relative strength index, which is right there, okay? So you're gonna tap that. After you tap that, it'll take you to a screen that looks like this. You're gonna change the period to 13, and you're going to click apply to close. So you're going to bring that little box open right there. You're going to make sure it's clicked as close. For style, I just use black. You can use whatever color you want. You can use pink, purple, green. You can use rainbow, whatever you want. I just use black because it's very simple, easy to see. And for level, you're going to go down here where it says level. You're going to click the little pencil. Chances are on your screen it might say like 30, 70, whatever it says. Just make sure you change these levels right here to 25 and 75. And then for style, I chose red because it makes it easier to see. You can choose whatever you want, any color under the rainbow. Make sure it's something easy to see. After you select all this, you're going to click done, and then you're going to click back. And then once you're back on the screen, you're going to click done. Make sure it's 13 period applied to close with levels at 25 and 75. Once you click done, it'll take you back to your screen. You'll now see that you have a what's called 13 period relative strength index. And you just see the zigzaggy line. So what this zigzaggy line does is it connects this right here. This indicator is connected to the chart. So if you look right here, this little movement right here on our RSI indicator shows this portion of the market movement right here. And you see how RSI sort of went up right here, the market went up right here. The market came down through here, indicator went down. What this indicator does is it shows the strength of the trend. In short, it shows how aggressive a move is. You'll typically see this indicator come up to the 75 or down to the 25 if there's a very fast aggressive move upwards or downwards as far as price goes in the market. As you see, we were going kind of sideways right here. Our indicator, we're going sideways as well. Then you see an aggressive quick move upwards, and you see our indicator brought this RSI line right up here into the 75 level. Typically what you see whenever price comes up to here on the RSI is you'll see a little bit of a reversal. Now, there's a little bit more to that. That's what all the training videos are for. It's all free. Everything you can learn for free. You can learn a perfect strategy that helps you trade for free. But as far as adding the indicators, this is how you get it set up. That's it. All you need is the moving average, and then you need the relative strength index. That's all the indicators you need for Mission FX. So now that we've got that out of the way, we're going to go over a few basic things right here. The first thing we're going to be going over is PIPs. Now, PIP is an acronym, and it's 3 letters, PIP. So what it means is it means price in points. There's a couple ways people say it. I say it price in points. Now what that means is whenever you're talking about a pip, you're talking about these numbers over here on the side of the screen on the right side. So there's 2 ways to calculate this price in points. And what this does is this helps you understand how much market movement you're getting, okay? And you're going to need this whenever you're determining your what's called lot size a little bit later. So let's look at pips here for a second. Very, very simple. Whenever we're looking at price in points, we're looking at 2 different types of pairs. One of them is a pair like this, Euro USD, and the other types of pairs we're looking at is any pair that has the Japanese yen in it. So let's look at AUD JPY. So any pair that has this JPY in it, there's a different way to calculate pips. So if we're talking about a price point for Euro USD, we're looking at this number right here, right? So let's just take where the black is right now, okay? So let's do 1.2325. So this 1.2325, every pip on a pair that does not include the Japanese yen is the 4th number after the decimal. Now, for every pair that is not the Japanese yen, 1 pip is equal to the 4th number past the decimal point. So for this, we have 1.2325, okay? Now, I'm going to put a little horizontal line right here just so you guys can see. 1.2325, okay? So that's one area right here. So since 1 pip is that 4th number after the decimal, we're just going to use it like an addition and subtraction problem if we're seeing if the market goes from somewhere like here to down here or here to up here. So let's just add another horizontal line in for reference and say the market comes up to 1.238 or 9. Let's do, yeah, something like that. So since it's the 4th number after the decimal, if price goes from that first line we just drew from 1.2325 and it goes up to 1.2329, we're looking at the 5 and the 9, right? So 5, let's count upwards, guys. 5, 6, 7, 8, 9. That's 4, right? That's the number 4. If you take 9 minus 5, that leaves you with 4. That means that from here to here, the market moved 4 pips. It moved 4 price points, okay? Now, if we draw another line, we can draw one below it. Let's draw one like way down here. Let's do 1, 8. Let's see if I can get it right there. Okay, so if the market moves from 1.2325 1.2325, then a 1.2318. It's the same type of like addition subtraction problem, right? So from 18 to 25, right? We're looking at the fourth number. So let's count 18, 19, 20, 21, 22, 23, 24, 25. That's 7. So that's 7. Sorry, guys. This is my dude, Majid. What's up, Majid? So that's 7 pips from here to here because we have 18 to 25, okay? So if you get caught in a double number, you just carry it past the decimal. So what you need to take away from this, everything I've just taught, is that for any currency pair that does not include the Japanese yen, 1 pip is the fourth number after the decimal. And you just count up or down from there like an addition and subtraction problem to determine pips, okay? So that being said, we're going to go quickly to the Japanese yen. So I'm going to click on this pair right here, AUD Japanese yen. So I'm on the AUD JPY pair right here for all JPY pairs. That means any currency pair that includes the Japanese yen, 1 pip is equal to the second number after the decimal. So let's just put a random line right in here, something real nice and simple to see. Let's do 0.8. Let's do something 0.89. Yeah. If I can get this thing to stop right there at the 0.9 and make it easy. Okay, 81.89. Let's move it to somewhere like let's do 8.3. Okay, cool. So I got it. Okay, perfect. So since 1 pip is equal to the second number after the decimal, if we're going from 81.83 right there up to 81.89, the 3 is what we're looking at, right? Second number after the decimal, 81.83 to 81.89. So if you go from 3 up to the 9, that's 3, 4, 5, 6, 7, 8, 9. This is a 6 pip movement from 81.83 to 81.89. 6 pips from here to here upwards, right? If we're going from here to here, it just moves 6 pips downwards. So if you sold the market right here and it came down here, you would have 6 pips of profit. If you bought the market right here, if you entered a buy order right here and the market goes up here, you would be in 6 pips of profit, okay? So that's how you do pips. We're going to talk about one more thing today. We're going to talk about what's called lot size. LOT, lot size. Lot size is a position size, and what that means is you're going to enter a number between 0.01 and 100 for most brokers, and that number is going to determine how much money in US dollars you're going to make or lose per pip. Okay, now I'm doing this from the US. I live here in Texas, so it's in US dollars for me. For your country's currency, it may be a little bit different, but it's the same concept. Okay, so right here, if you enter a trade, I'm going to tap this top right hand corner button, the plus. So right there, new order. I'm going to click right there. You can use what's called lot size. This number right here is called lot size. You can use 0.01, 0.1. You can use 1.0. You can use some weird number like 1.21. You can use whatever you want. So what this means is whenever you use a 0.01 lot size right here, okay, 0.01 means you're going to make 10 cents of profit per pip. Okay, so I'm going to say that again. When you use a 0.01 lot size, you are going to make 10 cents of profit per pip. Now, how this works is you take the decimal. All you do whenever you're looking at a lot size, you look at the lot size, you take the decimal, you move it 1 to the right, okay? And the number you're left with after you move the decimal 1 place to the right, that is how much money you're going to make per pip. So for this 0.01, we move the decimal 1 to the right, leaves you with 0.1. If you look at that on paper, 0.10, that means 10 cents, right? 10 cents in US dollars. You make 10 cents per pip. So if we're going back to our chart here real quick, if we bought right here using a 0.01 lot size and the market goes from 8.3 to 8.9, we're getting 10 cents per pip and we're catching 6 pips of profit market movement. So if you catch 6 pips of profit and you're getting 10 cents for every pip of profit, that's 10 cents times 6 for 6 pips, leaves you with a 60-cent profit from here to here. Another example is, let's do this again. So, but this time, let's just use 0.10, okay? 0.1, we're going to move this decimal right there. We're going to move the decimal 1 to the right. So that's going to leave us with 1.0. So if you're looking at that on paper, that's 1.0. That means $1, right? Like $1. So that means you're going to get $1 per pip. So if we go back here looking at the chart, from here to here, if we buy here and close the trade right here, this is 6 pips of profit. You get $1 for each pip. $1 times 6 leaves you with $6 of profit that you make from here to here. Now we're going to go back one more time, one more example. You can do this too. Let's say you want to put 1.00. Okay, so your lot size is 1.0. You're going to move the decimal 1 to the right. That leaves you with 10.0, meaning 10.0, which if you're looking at it on paper, 10.0 means $10 per pip. So go back to our chart here real quick. Once again, we catch our 6 pips of profit. We buy here, close the trade here. $10 per pip times 6 pips of profit. What's 10 times 6, guys? 60 bucks. That means if you buy here, close the trade here, using a 1.0 lot size, you will make $60 on this movement, which since we're on a minute 5 chart, 5, 10, 15 minutes, it looks like 15, 20 minutes, you could have made 60 bucks if you predicted the market will go from here to here. Now it also works the other way. If the market comes from here to down here, you'll lose 60 bucks, okay? And if it goes further, you'll lose like 100. And if it goes even further, you're gonna lose like $1 million bucks. So you wanna make sure you're managing your trades with a stop loss and a take profit order, all of which you're going to learn in the coming videos. So that's what a lot size is. So I hope this has sort of taught you what a lot size is, taught you how to trade them. We're going to learn more about the little details, nitpicky details here and there a little bit later. But right now you have all the basic information. So just to recap real quick what you've learned at the lower right-hand corner of the screen is your quotes window. From that window, you can click on these currency pairs and you can look at the charts. I've also showed you how to set up the indicators, which is this simple moving average, and also this relative strength index, the RSI indicator. And you also know what pips are for USD pairs, or not USD, but any pair without the Japanese yen. It's the 4th number after the decimal. And for Japanese yen pairs, you learned that 1 pip is equal to the 2nd number after the decimal. Very simple. Very, very simple. So that's what pips are. You also learned what a lot size was. 0.01, you get 10 cents per pip. 0.1, you get $1 per pip. And 1.0, sorry about that, 1.0 means you get $10 per pip. Now you can also do weird stuff if you want, like you can do 0.15, move the decimal 1 to the right, you're going to leave with 1.5. That means you're going to get $1.50 per pip. You can do that. You can do whatever you want. Generally, people stick with 0.01, 0.1, 1.0, and the first starting keeps it easy, keeps it simple. So you've learned what a lot size is. You've also learned about this middle section right here, which is your open trades. Whenever the market's open, we'll go over a few examples next week. I'll show you some live trades, some open trades. Once you open a trade, it pops up in here. You can manage that trade, close it, hold it, whatever you want, all from this window. Then once a trade closes, the next tab is the trade history, and you learn how to view your trade history. So this is how you use the Metatrader 4 app, guys. This is a very brief intro to what Forex is, how you look at the charts, how to get the indicator set up, and what the basics of Forex are, and how to calculate your lot size and how to use pips to see price movement. So I hope this was helpful, guys. I'm looking forward to seeing you in the next video. Thanks for choosing Mission FX to do all your free training. I'm trying to make this as simple as possible for everyone and just leaving out all of the other garbage that you don't need to know, because a lot of the mistakes, like I've said this before in other videos, that people make is they learn way too much whenever they first get started in Forex. There's no reason for that. You just need to know exactly what you need to know to make money, to get in and get out, and keep your mind clear. So that being said, guys, thank you for watching. Nick Sean of Mission FX here. You can go on to the next videos, go back through this video if you want and take notes, and I will see you guys soon. Have a good day. Bye.